Good morning, traders. Today is July 13th, and we are green today. We are doing our daily recap. We are green $1,700 in 10 minutes of trading. Now, I stayed behind, I looked at the market, and I don't see anything that I am too interested in right now, and I don't expect myself to take any more trades, but we are locking in, we are getting in, we got out, and that's it. So let's walk through the trades for today. Now, the only stock that I took today was AMIX. It gapped up today on patent news, endoscopic nerve sensing, and ablation system patents. So it had some pretty good news if the patent was actually worthwhile. Unfortunately, this stock went through a 21-to-1 reverse stock split. And because it did that, I didn't put too much weight into the gap up. And in fact, I was expecting a pretty strong fade. And that's exactly what happened today. Now, daily chart, again, most of these daily charts are like this. Extreme downtrend. There wasn't too much going on today. It was just a really, really bad daily chart. There was no blue skies. There was no breakout levels. It gapped up. It trapped a lot of liquidity and it faded right back down. So let's break down what happened today. First, I saw this push on the 5-minute from 650 to about 830. Now, if you look at this chart, you can see that the support level is pretty clear, $7, and after this candle, it's 771. And the resistance level is around 830s. So after this candle, I didn't trade it. I wasn't sure if it was going to continue pushing 100% like a lot of these stocks have been doing lately. So I didn't know if this push to $8.30 was going to continue higher to $9, $10. I didn't know that yet. But once I saw this rejection and this pop, it was pretty clear to me what was going to happen. Now, you can see the wick on this 5-minute candle here to about 670. I didn't get in on this candle at all. And the reason is because if you try to get in on this candle without a proper rejection, look at the volume. The volume hasn't decided that it wants to fade yet. It hasn't trapped enough long traders in this momentum setup yet. So because of that, I waited. It pushed again, made a double top to $8.30. Now this push was so fast. It tapped it and immediately it flushed down. So I had to be quick. I was already looking at the stock, so I pre-borrowed the shares. And I wanted to get in below $8. But because it happened so fast and there was a large spread for an $8 stock, I couldn't get in at the $8 level. So the next logical spot is a breakdown below 770. Now again, because it happened so fast, I only got in half size. Because I knew that if I was wrong, I could afford to risk 830. But if I got in with my normal size, risking the 830s, I wasn't confident enough to go in full size right off the bat. And because of that, I got in half size. Now, after this fade, it tapped about 680 and it popped right back up to 730s. I guess it didn't hit 730s on this chart. It did on the level 2, but it was just the ask. I guess it didn't actually fill at 730s, but it popped up to 720, 730s. And here was very critical because if it reclaimed 750, I want to get out. My average was good enough in the I think it was 767. It was good enough that I could hold it. But if it starts grinding back up, so the pattern that I was really trying to avoid was, you see this drop here. Now, if it did this and it started grinding back up, that was the exact pattern I really want to avoid. Because if it did that, it was showing that $7 was support. And if it did that, I would have to get out, break even, or small green. So that's what I was thinking. I didn't want to short in this little bounce because even this candle here had a very large bottoming tail. So a lot of people at this level was still respecting the $7 level. So I waited. And when I saw that $7 was about to break, I added. Now, this was not my favorite setup, but the add on the breakdown below $7 was largely because I was watching the level 2 very closely. I saw that 720, 730s was completely getting destroyed. $7, the breakdown was imminent. Now, you have to think about your averages. If my average was 770 and I'm shorting at $7, my average now is 730s. So 730s, I had to think where my risk level was moved to. once that happened, once I added $7 for that breakdown, I moved my risk level right above these candles here on the 730s to 750s. Because there's such a large spread, I couldn't set a hard number, but 730 to 750 was roughly where I was going to look to get out break even if I was wrong. And after this flush to 650s, I got out about, I want to say 70% of my position. I'll show you the actual chart later, but I got out majority of my position in these dips right here. And I think I had a tiny amount of size. I think it was like 400 shares or so, where I got out and I bottom ticked it at 630s. Now, according to my stats, I knew this stock was going to do one of two things. It was going to fade to about 530s. Now, it didn't hit 530s, it actually hit 550s. But I knew it was going to hit this area specifically. I wasn't sure if I wanted to hold or not. And the reason is because Thursday and Friday I tried holding and I got chopped out. I went from green to red, or green to break even really, on both days. So today my mindset was, I don't know if it's going to hold, but let's just lock in some profit, start off Monday on a nice green day, and then if you want to hold, we can hold the next day. So that's kind of what I did. I got in 760s, break down below $7, covered in the 650s. My average exit was 658. My best exit was $6.30. And you can kind of see it slowly grinding back up now. So I got into a really bad liquidity trap on Friday, and I had to get out at a really, really bad spot. So when I saw this today, I did not want to make the same mistake. I knew I was leaving money on the table, like you always do when you trade. I didn't want to be greedy today. I wanted to make sure I actually lock in a good green day, just to make up for the last 2 days. If I want to hold on for tomorrow or later on this week, now I can. I have a solid cushion for the rest of the week. So let's go look at my actual trades. I was watching AGEN, but I can explain this one later, but this was just a terrible stock to trade overall. So AMIX, we can see the levels I was drawing, the push, the rejection, the retest, and the fade. And let me see if I can find the chart. Yeah, so this is my chart. You can see I got in on this candle, 760s, re-shorted $7, or added at $7, and I got out all my position, almost all my position on this candle, and I got a little more on the wick. I actually considered shorting this again at 620, and the reason is because I knew at 620 it was probably going to fade. I have my stats is below 650. If I short at 620, I would be risking about 650 to 660, and I opted not to. I just didn't want to get into a sticky mess with bad liquidity. You can kind of see AMIX right now. Like, if you look at this, you have $6, $5.77. I mean, it's a 20-cent spread. It wasn't always like this, but I knew once it breaks below $6 and 5.80s, it was going to have a really tough time supporting the stock with solid liquidity to get in and out. And because of that, I got out way before then. I could have held it a little while longer, but I don't want to have too much FOMO or start rambling. We're green 1756. There's nothing to complain about. It's a solid green day. We're locking that one in. Average in around $7.31 because I added again at $7. So 760s and $7 with some slippage. Average 731. Average exit was $6.58. And that locked in 1756. Hope you guys enjoyed my daily recap. That's all for today, and I'll see you guys in the next one.